market, by the way, is down 60 points. And the Nifty is now trying to keep its head above 24,900. So there's definitely downside pressure, despite the fact that the two big banks have not disappointed on earnings. ICICI Bank and HDFC Bank are still trying to hold up. Well, we're going to stick with the financials, actually. Lots and lots of other names beyond the Nifty also reported numbers. And L&T Finance is the next stock, the next company that we're putting on the radar. It was a slightly mixed set of numbers for the quarter gone by. We have Sudipta Roy, Managing Director and CEO at L&T Finance, joining in. Mr. Roy, thanks for being with us. As I come to you, I just want to tell our viewers, just remind them, your growth is looking absolutely fantastic, right? The overall book is growing by 15%. The retail part of the book, I think, is even better, 18%. And you're continuing on your journey of, as you call it, retailization of the book. So that's very much on track. I think your NIMs plus fee, 10% plus, no problems there. But I want to start by understanding what's happening with provisions and asset quality. So let's look at this. You have utilized 300 crores of prudential provisions. And so far, out of your entire, provision buffer base, I think 700 crores have been utilized. So what is the thought process? This is why your credit cost has also come down. Sequentially and year on year, your credit cost is down. Just help us understand what is happening with the asset quality. Will you be rebuilding these provisions? Is there any stress? And what can you guide for asset quality this year?
Thanks. Good morning, and thanks for giving us the opportunity. To answer your question, obviously, yes. As you are aware that we are one of the largest microfinance players in the country, specifically the third largest. And obviously, last year, the entire microfinance industry went through an asset quality cycle. So overall, some of them, given this product where it's like almost 90-95% loss given default, any customer who misses his payments, tends to flow forward. We actually have sort of had a reasonably sort of tight control on credit costs. We are the lowest in industry against an average sort of industry loss rates of 10% plus. Last year, we ended last year with about 4% loss rates. So in a way, we are probably, an outperformer in terms of credit costs in this segment in the industry. However, a couple of sort of incidents happened, which obviously we couldn't predict. The Karnataka ordinance happened in February of last year. And in a short period of February of this year, actually, last financial year. And in a short period of 2 to 3 weeks, we saw collection efficiencies in Karnataka come down by almost close to 300 basis points. Now, that is something that you cannot plan for. And the fact is that the climb up on collection efficiency when such an event happens is a slow and gradual progress. We have been climbing up in collection efficiency in Karnataka by about 30, 40 basis points with every passing month. But, that sort of gave a little bit of flows which we had sort of originally not planned for. However, in the rest part of the country, the collection efficiencies have been inching upwards quite well. We ended the overall collection efficiency in Q1 FY26 in the microfinance business at about 99.34%, which was, and we expect that this gradual restoration to what we call normalized collection efficiencies of 99.6 to 99.7% will happen over the next 3 to 4 months.
So, Mr. Roy, just a couple of further questions on that. Has all of that Karnataka impact, this MFI ordinance, has that played out? Could there be further stress? Again, I'm going back to the provisions which you utilized. Will you have to, are you thinking of building up your provision buffers as well? Because you have, I think, just about less than 300 crores left now.
Yeah, we have.
So what's the plan? And your credit cost guidance, the guidance you've given so far is, I think, 2.3 to 2.5%. Are you confident that that will hold?
See, the total amount of macroprudential provisions left is about 275 crores. And coming to your Karnataka question, the collection efficiencies have gone up from the sort of dip that we saw in February, but it's nowhere near normal of 99.5 to 99.6% what we expect. I think we will take till about end of September, maybe early October to reach those numbers in Karnataka. As regards to the sort of the usage of macroprudential provisions, you said that we have 275 crores left. The objective of the management to be as prudent as possible and to use as little of that as possible. And I do believe that the guidance on the credit costs that we have given, I do believe that we will be able to test those marks without sort of support on any macroprudential provisions in Q4 of this year. Because by that time, I expect sort of the asset quality headwinds which had appeared in the microfinance segment and to a certain extent in the two-wheeler and the unsecured asset segments to completely dissipate by then. So yes, we continue to steadfastly guided to that particular range of numbers. And our three-dimensional credit engine, Cyclops, which we had implemented, and now almost over 12 months of implementation in our two-wheeler business, implemented now in our SME as well as our tractor business. In September, it will be implemented in our personal loans business, is giving actually quite encouraging results.
MFI, sir, you said that the MFI business asset quality issues will bottom out by which quarter?
It will bottom out. I do believe that it will bottom out by Q3. Our original estimate was Q2, but the fact is that the Karnataka ordinance actually slowed down the recovery process. But I completely believe that on the back of a very good monsoon and improving rural liquidity, it will bottom out by Q3.
All right. Hi, Mr. Roy. Good morning and good to see you, Ben. Growth you were aiming for, I think, was around 20%. Do you stick to that? And give us which segments will be driving this growth? Particularly rural, I think you were guiding for 10 to 15% out there. So let's focus on growth first.
Yeah, I stick to that growth numbers. In fact, if you see on a QOQ basis, our disbursements have grown strongly by about 10% on a QOQ basis. In fact, the rural business finance vertical, which is our microfinance vertical, actually delivered a QOQ growth. Average last quarter, we were disbursing anywhere between 1,600 crores to 1,650 crores a month. In this particular quarter, we have inched that up to about 1,800 crores a month. And I do believe that on the back of improving credit quality situations in the microfinance industry, we will be probably touching anywhere between 1,900 to 2,000 crores of fresh disbursements every month. Since our two-wheeler sort of credit quality has also improving sharply, this quarter our two-wheeler disbursements have gone up. And I do believe that the two-wheeler disbursement will continue to grow strongly. Personal loans disbursement on a year-on-year basis have grown at a very strong pace of almost 60% plus. Our partnerships with Cred, PhonePe, and Amazon Pay are scaling very well. We'll be adding a couple of new large big tech partnerships over the next couple of quarters, which will add volumes to that. Our home loans business is also growing strong. And the gold loans business that we acquired from Paul Merchants, actually we'll be setting up about 150 to 175 branches in the remaining part of new branches in the remaining part of the year. So our gold loans business also will grow strongly. So overall, yes, we continue to guide toward that 20 to 25% AUM growth for the rest of the year.
Very quickly, Mr. Roy, NIM plus fee will be in that targeted 10 to around 10.5%, and ROA moves to around 2.8 to 3%.
So the NIMs and fees should be within the guided range of 10 to 10.5%. We have seen a weighted average cost of borrowing reduced by about 17 basis points on a QOQ basis. And I do believe that over the rest of the year, we will see rate efficiencies of almost close to 25 basis points, primarily because of the transmission of the rate cuts to the sort of the liability side, liabilities originations. And we are also pushing, taking our yields up in every line of business. So yes, we will try to sort of get our NIMs and fees in the corridor of 10 to 10.5%. And
and ROA?
In terms of ROAs, to probably by Q4, we should test near 2.8%. However, that remains also to see how the credit quality pans out, which are very hopeful right now, that we should be near to 2.8% at the end of Q4.
Got it. Thanks a lot, Mr. Roy, for joining in and filling us in with all of those details. Well, we've got another management that's joining in, Mr. Jayant Acharya, the joint MD